Welcome to Dr. Fred Markets. This is not financial advice. While most people ignore what's happening in the markets, a few choose to pay attention. And that difference, that simple choice to stay informed, changes everything. You're one of them. Let's get into it.
Trump didn't win the presidency. He turned it into a private equity fund. Signal 1. The Washington Post just dropped the number nobody wants to process. Trump's net worth ballooned by around $4 billion during and after his time in office, not from crushing it in the S&P. From monetizing attention, brand, and chaos at a level no modern politician has touched. His balance sheet turned outrage into equity. That's not politics, that's a playbook. Signal 2. Look at the actual market tape today. S&P 500 down a hair, Nvidia bleeding over 1%. The two shiny things everyone worships, index funds and AI chips, are quietly chopping sideways while the loudest narrative machine in America is compounding brand equity like a tech startup. The safe assets are chill. The attention asset is on fire. Signal 3. Scroll away from politics and check the balance sheets of the quiet killers. Private credit funds and litigation finance. Yields in private credit are often sitting in the high single to low double digits, while your savings account wheezes at 4 to 5%. Litigation finance funds hand out cash to sue each other and take a slice of judgments like a casino house edge, all powered by conflict, headlines, and drama, not productivity. Weaponized friction. Here's the cliffhanger. What happens when the real bull market isn't in stocks or crypto, but in monetized conflict itself? Those three signals map to one ugly truth. We live in an attention standard world, but the real money sits one layer deeper, in conflict standard finance. Trump's wealth jump is just the loudest example of a quiet asset class, institutions that profit directly from people fighting, suing, and screaming at each other. Forget the S&P for a second. A standard is just what everything else gets priced in. We used to be on the gold standard, then the dollar standard. Now Twitter rage, court rulings, and viral clips set the mood for capital flows. Conflict generates three cash streams: political donations, legal battles, and regulation whiplash. Private credit and litigation finance sit in the middle of that mess, taking a toll every time money passes through. Trump's fortune didn't just go up. His brand turned into collateral. Licensing deals, media companies, debt refinancings. The market looked at polarization and said, yup, that's an asset, we'll leverage that. That's the same logic private credit funds use when they lend against busted companies, legal settlements, stadium naming rights, and random weird cash flows you never see in a brokerage app. Here's the mechanism. Step 1. Attention creates polarization. Step 2. Polarization births lawsuits, debt strain, campaign cash, regulatory risk. Step 3. Specialized funds lend into that chaos at 10 to 15 cent plus yields, backed by contracts and collateral, not vibes.
Let's pause for a second. Ask yourself this. Do you really understand what's happening in the markets right now? Do you know how this affects your money, your savings, your future? Most people don't, and that's exactly why you're here. Let's keep going.
Public markets price hope. Private credit prices pain. Everyone today is doom-scrolling headlines about elections, World Cup drama, culture wars, health scares, and missing the machine behind it, a financial layer that treats every controversy as a coupon stream. So what do you actually do with this? No, you don't go become a politician or start a riot for yield. You do three things. First, widen your map. If your entire portfolio is SPY, QQQ, and a couple of AI names, you're basically betting that optimism outruns conflict. History disagrees. Learn how private credit works. Business development companies, BDCs, private credit ETFs, closed-end funds. Look at how they earn money. Senior secured loans, floating rates, covenant packages. This is conflict monetization with guardrails. Second, study the capital stack like it's a new language. Trump got rich because he played above the retail layer. Equity, converts, licensing, SPAC mechanics. Private credit investors sit higher up than equity, lower than depositors, and get paid before the story ends. Ask of every asset, am I getting paid to own the dream, or am I getting paid to survive the lawsuit? Third, stop worshiping volatility and start valuing cash flows. The loudest chart on FinTwit is Nvidia's line. The quiet line is boring, collateral-backed yield that doesn't care who wins the election, only that the check's clear. You don't have to YOLO into obscure funds, but you do need to know they exist, who runs them, and how they behave when the world melts down. One concrete thing you learned today: there is an entire asset class whose core business model is monetized conflict, and it sits in private credit and litigation finance, not in your Robinhood app. One mechanism you now understand: attention, conflict, legal, and financing needs. Private credit and litigation funds earn fat coupons while everyone else argues. One action you can take: open a watch list just for conflict cash flow plays. BDCs, private credit ETFs, litigation finance names, and read one actual annual report this week. Track how much they earn, what they lend against, and when those loans reset. That's how you stop being the product and start understanding the game. This is not financial advice, but here is the truth. The next presidency, the next scandal, the next viral outrage won't just move polls. It will move coupons, recoveries, and yields in a hidden layer of markets that pays people who lend into chaos while the rest of the world screams about it. If you want more of this, one uncomfortable truth per day, zero fluff. You know what to do. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's a wrap for today on Dr. Fred Markets. I hope this gave you something to think about, a new angle, a clearer picture, a better question to ask. Remember, this is not financial advice. Do your own research, always. If this video added value to your day, subscribe. It's free, it takes 2 seconds, and it's the best way to support this work and keep it free for everyone. You'll also find every video as a full article on the blog, drfredmarkets.com, and the newsletter is in the bio. I'm Dr. Fred Markets. See you in the next one.